I thought it based out and then faked a whole bunch of people out and they wanted to buy it again. I thought in 2000. Okay, maybe that was up here when it was not 2006. It was 2005. This is the breakout. Okay, so this is the breakout that faked everybody out. I gotta get in close to see it. There it is. Okay. Notice on the breakout though that everybody was buying back then. That thought taser. Here it goes. Get on another leg. Look at the volume. Where is it? Why isn't the relative strength line hitting new highs while prices compared to this? Look at an arithmetic chart on this thing. Arithmetic daily going out. You know, I just don't understand why people were thinking that that was the right time to buy. And, of course, it rolled over right there, and you should have definitely been out of all of it. Even if you went long with me here in 2003, let's say you would have waited. How much would you have then gained even if you would have held and waited for it to break the 200-day moving average? You would have still have gained 1,000%. Doubled is 2,000%. Trust me, guys, waiting on the breakouts is a superior method than trying to bottom fish. And anybody that thinks that we've missed the bottom doesn't understand the stock market at all. And you really do show your ignorance of the stock market. The same people that think that we missed the bottom are the same people that told me to buy Goldman Sachs, Citigroup, Bank of America, Bear Stearns, Lehman. Remember Sandy Wright? Remember? You remember you telling me to buy these stocks, but you didn't ever tell me when to sell, did you? In March? So these same people here that think that the bottom was in March and that you're an idiot if you missed it are the same people that bought the September low, that bought the October low, that bought the July low, that bought the April low, that bought the March low, that then told me for a fact that the January low was the right low. You guys were wrong the whole way then, and you guys are wrong now if you think you missed it. The NASDAQ and its super strength is telling you that it's right. If the IBD indexes can then start leading, things will be much better. But the IBD indexes aren't leading. That means speculative stocks still do well. And that means that we're going to still have to keep playing speculative stocks and make money on that. Now, I'm going to show you recently some winners that we've had. ANCI has been a long-term winner. When we went long back here in June to its recent top in, let's use September, you can see that in 1-2 months, it moved up almost 100%. That was our last big mover. But since then, it hasn't given me a sell signal because it hasn't closed below the 200-day moving average. So I'm still long, and it's bouncing off the averages, and now we have a 73% gain. So now it should be trying to move higher than trying to make us more money. If not, no big deal. We cut our loss below with a close below the 5,200. Recent longs that we've taken that have done really well, I'm only going to show you one because only one's up too far that if you bought it, you'd be crazy. FIRE. We bought it in early April, and here it is now. Did I miss the March bottom on that one? No, I sure didn't. And let me tell you something, folks. Whenever this market gets going, some of you guys that think that swing trading or day trading is superior, when the next taser comes, and even if it's, let's say it's an NTES, if you would have bought the NTES move off the 200-day moving average and just held on to it today, you're up 32% and a little bit over a month. And that on margin is a 64% return. And that's really good so far because NTES should just be starting. It's just now breaking out of a base. Here's the base in case you guys don't know what I'm talking about. There's the base. There's the breakout. It's pulling back, trying to stay around the breakout pivot point area. If it can bounce breakout here on heavy volume, it's a long. But guys, these are the leading stocks. There's some of the stocks in China. This one. These are your leaders. These are your real leaders. And look at this one. Let's say you would have bought this one off the March bounce. That's the highs in April. And a little bit over a month. You only got a 58% return. It's only a 116% return. No big deal. 116% return in a little bit over a month. No big deal in this market. Guys, the best stocks come after breakouts. They don't come before breakouts. We can get long stocks early and do very well by buying early. That's why I added to 3 positions on the 22nd. That's why I added to a position on the 21st. That's why I added to a position on the 17th. That's why I added to a position on the 16th. That's why I added to a position on the 15th. That's why I added to a position on the 9th. Because when you go long a stock, it should start moving higher. And if it moves higher and pulls back correctly to moving averages, you'll have other opportunities to buy and get very long. Investors Business Daily, they may not be heavily invested or they may be heavily invested right now. I'm not sure. But I can tell you one thing. When they call stocks like this, right here, a cup with handle, this being the cup, and with this being the handle back here, here's what they call a cup with handle. This was a cup with handle. Not to me, because it's from a downtrend. And I was taught that cup with handles don't come from a downtrend. So, whenever I poke this long, STAR, I poked it because of the beautiful short-term chart. Looks very beautiful short-term. Breaking out of this flat base, 3-week flat base to a correct flat base. However, it can't load up. Why? Because it hasn't even built a proper base yet. Look at a weekly. 1, 2, 3, not even 5-week base yet. So coming off the downtrend, it hasn't even built a base, unless you want to call this an ascending base, and then it has. The ascending base being here to here. Let me pull that up on the daily. So if you want to call that ascending base, sure. However, notice how star starts to work at first for us, then it fails. And some people are like, how can this thing fail? It just broke out of a cup with handle. No, it did not. IBD, seriously, may have called one wrong. You know, it's hard to believe, but this is why it's an art and a science. STAR has just only now built its first base. Do you buy here? If you're psychotic, because it's up 18% off the 50-day moving average. That means on margin, a 36% pullback still puts you in a good buy position. But what do you do with that 36% pullback? You're down 36% now. So no, you don't buy star here. If star is going to work, it's going to move sideways. And it's going to continue to move sideways and base out. And either build a base on base or pull back to the 50-day moving average and give you a better buy point. Or what you can do is draw this pivot point line. Oh, I'm going to have to use the daily. Sorry, thought I could do that. Use this line. And whenever it comes back to it, the breakout area, the highs going down to where the previous highs were, breakout, support area, when it pulls back to the 1750 area, then maybe you could go along. Right here, it's too dangerous. However, guys, you haven't missed anything if you missed the bottom of the NASDAQ. Just to teach you another thing about, in case you think that you ever missed a bottom, let's go back to the Shanghai SC Composite rally. I wish I could show you some Shanghai stocks back then. Maybe I could use some like, let me use speculative stuff. No, I'm going to go and just stick with the Shanghai. I know those aren't Chinese stocks, but don't matter. Okay, so let's say you're interested in the Chinese stock market, but you missed the 2005 low. Did you miss anything? How about the 2006 low? Did you miss anything? How about the 2006 midterm low? Miss anything? How about if you didn't buy the Chinese stock market to 2007 and then you only got that uptrend? Okay, so let's say you would have waited to 2007 and just now after this base and breakout you decided to go long. Were you too late? I would like to think not, considering that the index still in about under 1, 2, 3, 4, 5, 6, 7, 8, in under 10 months went up 110%. Guys, it's better to be late than early in the stock market. You go early and you go heavily early, you're going to pay for it. You wait till confirmation, till it tells you, now it's time to go, then you're going to be fine. But right now, the NASDAQ Composite, look at the relative strength line to the S&P 500. Beautiful. There's one key missing ingredient. Look at the IBD 100. Look at it on a daily. It wasn't even up 1% yesterday. Or I mean on Friday. Yeah, yesterday. And look at volume, lower. Look at the IBD 8585. It was down yesterday, lower volume. Look at the relative strength line since November, or since the March lows. Or actually, let's go back to November. So here's the lows in the stock market in November, and here's the relative strength line on the leading stocks. That's not good. And here's the other one for the IBD 100 on the daily since November low. That's not good. However, look at the NASDAQ from the November low. Oh my goodness, that's extremely bullish. Guys, if the IBD index was doing that also with the NASDAQ, we wouldn't just have 18 longs, which, by the way, our 18 longs is up from 3 longs on March 10th. On March 10th, I had 3 longs. I now have 18 longs. And all 18 are looking like they could move up 50 to 100%. A few look like they could hit 100% because they did do the 20% move in 2 weeks. And I could show them to you because you'd be dumb to chase them, but I'm not. Anyway, I'm going to wrap it up here. 2 parts for you guys. Very lucky for part 1. I'll be back with 3 more videos. Aloha.